Good afternoon, everyone. Thank you for tuning in today. My name is Megan McGilvery, and I'm joined by Richard Sheane and Sean Allen. And today we're going to be discussing land use sector carbon accounting and target setting. And we really hope this session is going to be useful for you all. Next slide, please. Before we get started, I'd like to point out that we're in webinar mode. So what that means is that all attendees are muted. I'd encourage anyone to ask questions as we go along. And the way you can do this is through the Q&A box in the banner. So please feel free to ask questions as we go along. There's a dedicated time at the end of the session for a Q&A, and we'll pick up as many questions as possible. The webinar is being recorded, so if you have to drop off early or if you'd like to share the slides and the recording with a colleague who isn't able to join today, we will be circulating the slides and recording with you after the session. So introducing our speakers today, my name is Megan McGilvery and I'm part of the Resilient Agriculture practice area, and I'll be facilitating the webinar today. I'm joined by Richard Sheane, who is a partner and lead of the climate change practice area. Richard has been advising businesses, NGOs and public sector organisations on sustainability since 2005, when he began his career in sustainability doing dairy farm footprinting. Richard also has an advisory role at the Greenhouse Gas Protocol as a technical reviewer of agricultural working papers and has also contributed to the technical working group of the draft land sector and removals guidance. We're also joined by Sean Allen, who is a senior consultant in our Sustainable Commodities practice area, and she has deep experience in deforestation and conversion-free supply chains. Next slide, please. So a bit about Freehill. We're an Oxford and London-based sustainability consultancy who largely work with businesses, policymakers, and NGOs on food and consumer goods supply chains. We have extensive experience supporting clients across our 6 practice areas shown here: sustainable commodities, climate change, circular economy, sustainable agriculture, landscape innovation, and bespoke analysis. Freehill was deliberately established, recognizing the cross-cutting nature of challenges we faced whilst appreciating that specific subject matter knowledge is needed to address them. Our approach led to the creation of 6 practice areas that are led by relevant experts, with team members working across at least 2 practice areas each to promote the sharing of ideas and innovations. Flag greenhouse gas accounting and target setting is a developing and relatively complex topic for businesses to manage. As shown here, it is cross-cutting, sitting across both the climate change and sustainable commodities practice areas, but also with impacts on other practice areas such as sustainable agriculture. The Freehill team have spent time digesting the contents of the 400+ pages of guidance released, and we've been supporting our clients on the interpretation and implications of the new guidance document. Today, we're going to share some of our insights into the guidance, and we hope this will be useful for all of you navigating this space. Today, we bring together 2 of our practice areas to focus on the interlinked challenge that continues to be addressed by seemingly different specialists and individuals. Next slide, please. So the agenda for today, we are planning to commence with a welcome poll, which I'm going to launch now, before handing over to Rich to give you an overview of the key documents in this phase, to describe the key points of SBTI flag target setting, before going into a more detailed introduction of the methods and watch-outs associated with new carbon accounting guidance. We will conclude with time for Q&A, so please use a question box throughout and we will get to these questions at the end. The poll I've launched is to gauge everyone's background in this area with 3 questions. What best describes your current flag status? What level of knowledge do you have on flag accounting reporting and target setting? And how do you anticipate developing your flag inventory and targets? So I'll give everyone a few seconds to finish answering the poll. So as you can see, many people are intending to develop flag targets for submission, but there is a lot of uncertainty in this area, with few people classing themselves as experienced. So I'm now going to hand over to Richard to discuss the key guidance documents in this area and hopefully help you to understand this a bit more.
Great. Thank you very much, Megan. Hello, everyone. So before I launch into the detail, I guess I thought it'd be good to set some general expectations around what we're going to cover today and the topic more generally. So as we've mentioned, this is new guidance on target setting, relatively new anyway, and the Greenhouse Gas Protocol accounting and reporting guidance is draft and is going to be finalized this year. So there's likely to be evolutions in these methods. And as Megan said, I started my career in sustainability, working in agriculture and dairy and doing farm footprints. And I'd say, the new guidance and approaches does add complexity into this space. And I'll be honest, it's taken a while for me to try and get my head around some of the implications and ways of accommodating the guidance. So it's definitely going to be a learning approach a learning experience for all of us. And because of that, we do think that alignment to these new accounting standards will be a bit of a journey over the coming months and years, particularly as you'll see later that we see a lot of the way businesses will practically deliver on accounting reporting in agriculture will be via farm greenhouse gas tools and secondary data still. So and those platforms will need to, or hopefully will start to align with the guidance. So in the short term, as a general principle, the key thing is to just be aware of the degree to which you're aligned with these new guidelines, especially the GHG Protocol and sector guidance, and be sort of transparent on where there's potential, non-alignment, and also make sure you focus on any areas which we see as kind of the main risk areas in terms of non-compliant, non-conformance with the standard. So today we're not going to go through every single requirement. As Megan said, there's hundreds of pages, 100 plus of requirements. So instead, we're going to be focusing on the sort of elements that we see as most material and noteworthy at this point. And today, we are going to focus mainly on agriculture, land sector guidance, and target setting does cover forestry businesses as well. The vast majority of what we do is in food and agriculture, so we're going to be primarily focusing there, but a lot of the concepts are transferable to other sectors in the land sector. And we will touch on the science-based target setting approach, but the focus will be as much or more on the land sector and removals guidance, because it's a sort of foundational accounting standard which feeds into the flag target setting reporting. So in terms of just a quick couple of slides on the context. So agriculture land use, including deforestation, is a significant source of global emissions, and also uniquely offers opportunities for removals as well. And even despite its significance, there hasn't really been a globally accepted approach for accounting and reporting developed, and as such, it was felt that because of the unique nature of the land sector in terms of the sources of emissions and sorts of processes, it was important to develop something that was specific to the sector. Hence, the development of the science-based targets flag target setting approach, and at the same time, the GHG Protocol, the accounting and reporting guidance for the land sector. And I mentioned we're focusing on agriculture, on farming today. For those of you who aren't who haven't done a lot of work in this space, we're really talking about 4 main categories of emissions and removals. So there is the non-land related emissions. These are such things as energy use in buildings and machinery on farm, the production of purchased inputs, so fertilizers, and also other goods, transport in and off of the farm. So there are a lot of kind of energy and industry sort of conventional, I suppose, sectoral emissions associated with farming, and those we've classified as non-land, and that's how they're classified in the GHG Protocol. There are 3 other more land-specific ones which the accounting standards look at, and that is land management. And so these include such things as methane from cattle, manure management, methane, nitrous oxides from application of fertilizers. So a lot of the sort of non-CO2 agricultural gases are within this basket, and also this covers if you're cultivating organic peaty soils and you're getting CO2 losses from that. So these are really the core farming emissions that you often hear talked about in studies of beef, dairy, and crop systems. In addition to land management, there is also the important topic of land use change. So this is capturing conversion between land types. So for example, forest land to cropland, and the emissions related to attributable to any agricultural production system. So the land management is really kind of within the same land use category, whereas land use change is conversion. And then finally, I mean, those are all emissions, and the green one is the removal. So where we draw down CO2 from the atmosphere into soils, into biomass. These are common examples. There's not an exhaustive list, but this gives you an idea of the overall basket of emissions and removal we're thinking about when we talk about land or flag emissions. One of the sort of areas of slight confusion, I think, is the fact that there are a few different terms flying about. So FLAG, Forestry, Land and Agriculture, was an acronym, I think, developed by SBTi. I hadn't seen it before. It might have come from somewhere else, but it is their way of describing the sector, forestry, land and agriculture, and the sort of the target setting methods that they've developed. There's another acronym which, if you start looking into the space a bit more, you'll come across, which is AFOLU, which is from the IPCC, whenever they develop their national inventories for countries, and a lot of the methodologies that then which then inform how we calculate emissions in businesses as well. They use this term to cover all of the non-CO2 gases associated with those sectors. So that's really the land management emissions is a key focus there. And then finally, in the GHG protocol, they don't use the term flag. They use the term, or AFOLU, they use the word the land sector as a means of describing, broadly speaking, it's the same sector as the flag, really, but there is these interchangeable terms used out there. We'll go into a little bit more detail, but about the differences between flag and the land sector guidance a bit later on. So in terms of the key standards or guidance documents that we're interested in, there's two sides to thinking about corporate climate accounting and target setting. On the left-hand side, you've got the sort of the basic accounting and reporting standards. So the GHG protocol is the one that is very commonly used. So your GHG protocol corporate standard, the scope 3 standard, which enables you to do full scope 3 accounting and reporting. And then additionally this is the new draft guidance, the land sector and removals guidance, which is meant to be used in combination as the draft stands with the scope 3 standard. So, and this is about how you do basic boundary setting for organizations, decide which emission sources to include. There's a lot in these documents about what you need to disclose if you want to be fully conforming with it. And there is some calculation guidance. So, if you're calculating land use change, you should use methods that are consistent with this sort of approach. They don't tend to define what emissions factors to use and precisely what calculation methods you use everywhere, but there's some of that in these documents. Then on the other side is the corporate target setting guidance, and standards, and these are intended to build off the accounting reporting and just provide, a more science-based approach to deciding how much emissions do you want to reduce from where and by when. And so they are meant to be used in tandem, and the science-based target setting approach references the GHG protocol and requires that you use that as an accounting standard. Today we're going to be focusing on the SBTi flag guidance, which is on the left of this right-hand block. There is flag requirements, the agricultural requirements in the net zero standard, but we're not going to be looking at in detail today. I mentioned at the beginning that there is this is relatively new and draft, and there's a bit of an evolving space. but it might be useful just to put down a few dates here. So in Q3 last year, the SBTI launched their version 1 of their flag methodologies for doing target setting, and at the same time, the GHG Protocol published their draft land sector guidance, so these two documents are meant to be used in tandem. That is still draft and will be finalised hopefully Q2 this year, depending on how the pilot goes and the revisions, etc. And the in terms, so this is so the GHG protocol is still under review, whereas the flag guidance, the version 1 has been published and is being used. And as we move through this year, there will be requirements for businesses to start using that target setting approach. So there are various stage posts that they put in their documentation to say that if you're a business and you've got land, flag emissions in your supply chain or in your own business, then at certain stage gates along the next few years, you will increasingly have to use that. So I won't go into the detail here, but just to say that it's sort of an evolving space, and there is an expectation that there'll be a version 2 of the science-based targets flag methods published. I'm not sure. I haven't seen any announcement on this. I don't have any insider knowledge on it, but my expectation is that that will probably be done once the GHG protocol has been finalised, whenever that is, and so I guess we can expect a version 2 of their approach sometime in 2024 maybe. So thinking about those couple of documents I talked about then, so the land sector removals guidance and the GHG protocol for accounting and reporting, and the science-based targets target setting. These are, I suppose, 5 of the things within all of those documents we think are kind of the most interesting aspects. We'll go into more detail in this later on in the webinar, but this is a sort of summary. Well, first of all, from an accounting and reporting point of view, businesses who have agriculture, forestry in their operations or in their supply chain will need to start using the land sector removals guidance for their accounting reporting, and start reporting by separate categories of emissions and removals. So, for example, land use change emissions, land management emissions, and removals. And there's actually quite a more detailed breakdown of the reporting requirements, but so that's a key thing to remember. On carbon removals within the land sector removals guidance, they are optional to report. You don't have to report removals, but if they are included, then as the draft stands at the moment, there's a bit of a step up in the need for properly evidencing and monitoring those removals over time, and including looking at annual carbon stock changes in carbon pools. So again, we'll go into a bit more detail on that later on, but that's one of the interesting things to come from the guidance. Then in terms of the target setting, so you've done your accounting using the land sector guidance from GHG protocol. You then want to set a target. For the SBTI flag target setting, one of the key things to bear in mind is that you actually develop a target that's for the land bit and for the non-land bit, so they're separate. So you have separate targets for each bit of your emissions inventory. So essentially, the flag bit is, very broadly speaking, the farm to farm gate, excluding processing, and we'll come back to some of the nuance around that in a second. One of the implications of this separating of the targets is that if you do a load of reductions in your flag agriculture bit, those can't count as a reduction in your non-flag bit, so the post-farm gate, processing, transport, industry and energy use. If you do set a flag target, if you've done science-based targets before, then some of this will be familiar to you. You can use what's called a sector approach. So it's an average reduction expectation, which applies across the sector. Or if you're active in one of a handful of commodities, which we'll show in a second, there is the potential for you to set targets that relate to production carbon efficiency, say for beef or milk. And then finally, worth noting is that on top of the kind of carbon accounting and reporting and target setting, within the flag target setting guidance, there is a requirement for businesses, if they're to have a flag target validated and meet their flag target, to also set deforestation targets. So there's a formulation of the wording there on the screen, which is their sort of standard wording. Again, we'll go into a little bit more detail on that in the webinar. So I've got 3 slides on the flag target setting. In some ways, I suppose maybe I should have done the accounting and reporting first, because that's what you do first, and then you set the target. But I thought, seeing as the flag bit is somewhat straightforward, we'll kind of do that bit first, and we'll go into the longer session on the accounting and reporting, which is more complicated. So this there's one area of confusion which is kind of helpful to discuss, and that is that whenever you do your your greenhouse gas inventory according to the GHG protocol, you broadly split your farm emissions into non-land emissions, so your farm energy use, your fertilizer production, etc., your emissions from land, and your removals. Now, whenever you come to do your flag target setting with the SBTI, these two, the emissions from land and removals, are definitely core flag emissions. For these non-land emissions, technically they're not flag emissions, and they're not always included in the pathways for agriculture. However, they've said that you can include some non-land emissions within your flag targets, and the reason they've said that is one of practicality, really, that a lot of people will be using data and tools that have those sources of emissions embedded in them already. So the common ones would be farm machinery usage and fertilizer production. So rather than mandate that people strip out everything and get the boundaries perfectly aligned, they are allowing you to include some of these non-land emissions in flag targets. So that's just something to kind of bear in mind. So in terms of the 2 options that I mentioned before, this is the sector, what they call the sector approach. So if you and the type of method you use here will depend on the type of sector, the company you are, where you're on the supply chain, and the nature of your emissions. But we won't go into too much detail on that. Suffice to say that there is an option whereby you calculate your total flag emissions, say it's 100,000 tons of flag farm emissions, and then you set an absolute reduction in tons of emissions at a rate that's approximately 3% reduction per annum. Just to highlight that these numbers here are from the guidance, but you should really be using the tool. I think there is some, these are kind of example figures, and the actual precise numbers do depend on a few variables. So for the sector approach, this is really recommended at the moment in version 1 of the flag guidance for what they call demand side businesses. So if you're a food manufacturer, if you're a retailer, you don't actually have farming in your farming production, then you should be using this across your flag inventory for target setting. They also have a number of commodity pathways, so these are intended to be a bit more nuanced and a bit more related to what is needed from a global perspective in terms of emissions reductions for different sorts of commodities. Within the tool that you use for calculating your target, you actually have regional versions of this, so it's not just a global average. There are, if you're sourcing dairy from Western Europe, say, there is an intensity pathway, and here you're looking at reducing emissions per unit of output, so it's more of an efficiency target than a total tons of emissions. Now these are, and as I mentioned, these are you should actually use the tool, not refer to these numbers, but this is just for example. And then finally, I just thought I'd put at the bottom there, this is the non-flag pathway, which is the sort of very generic global level emissions reduction needed. That is a 1.5 degree aligned pathway, and actually one of the points about flag is that there are only 1.5 degree aligned options for setting flag targets. You can't set less ambitious than 1.5 degree aligned. So you can see that the sort of energy industry is expected to decarbonize faster, and that's because some of the emissions from agriculture are more technically harder to abate, so nitrous oxides from soils when you apply organic or inorganic fertilizers. And the final slide on flag is just to mention the deforestation targeted again. That's just the text that I showed previously. The required is that you commit to words of that nature. It is recommended, but in our view, really, it's needed to be credible beyond, getting the validation to align with the accountability framework. Set in 2020 or earlier cutoff date, and also include no conversion and no peat burning commitments, so going beyond deforestation. Okay, so that was the quick section on the flag target setting. So now we're going to go into the slightly longer section on accounting and reporting for the land sector. So practically speaking, your approach here is going to depend a little bit on the nature of your business and your supply chain. So, do you have traceability to farms, either directly or through suppliers? Can you can primary data be collected from farms, or is a limited traceability, at least in the short term, and so you will be still relying on secondary data? And so we think that subject to the draft, the finalization of the documents, we're hopeful that established tools will align to those to the guidance in terms of the scope, the reporting side of things, because these tools have developed over time to meet the need of being able to do quite complicated analyses. And so I don't think going back to a blank spreadsheet and doing from first principles IPCC calculations is really what's going to be scalable. So I suppose, if you're back to farm, then we will be using these to kind of align to the flag land sector guidance. And similarly, there will be a use for secondary databases as is used at the moment for crop production, livestock production. So in the short term, one of the tasks for us, and for you if you're trying to apply the guidance and use these data, is to just really be clear on the degree of alignment of the tools, of the data sets. It's unlikely that they're all, it's extremely unlikely they're all going to be perfectly aligned to the guidance from June, just because there's quite a few new kind of interesting accounting and approach reporting requirements being suggested. So in the short term, it's just understanding any gap and addressing them if you can, being transparent on the degree of alignment. In fact, the GHG protocol has got this spreadsheet. This is just a little snippet from a spreadsheet on their website where they have gone through a number of very common data sources, tools, and done a bit of a kind of a check of, do they cover this type of emission or removal? So that's quite a useful kind of starting point if you're looking for either a data set that has land flag data, flag data in it, or you want to have a quick sense of the degree of alignment. All I would say is that this, they've covered, I don't know, there's tens and tens of rows in this spreadsheet. I suspect, I think if you're heavily reliant on a single data set, you need to really go back to that source, to the methodology, to the tool, to really unpick and understand the alignment yourself. This is a good indication. So we're a long-term user and supporter of the Cool Farm tool. We've kind of been looking at all the different tools and their alignment just so we can help advise our clients. And this is just an example. I won't go through the detail here, but it's got pretty good coverage against the different categories and subcategories of emissions. And there are a couple of areas where tool takes a slightly different approach to accounting, different from what the land sector is proposing at the moment. So, if you're using a tool, any tool, whether it's this Cool Farm tool or agriculture or any data set, going through this sort of process of just understanding that alignment is going to be quite important. So the next section, which is I think the final kind of bit of the webinar, is looking through each one of these categories of emissions and removals to look at, what are the key messages, what are the likely data sources, and what are the risks or watch outs as we see it if you are trying to do a land sector guidance aligned inventory. So non-land emissions. So this is, I suppose, the energy use on the farm, the production of fertilizers. So I suppose one of the things here is that when you use the land sector guidance, at the moment it says you need to be also applying full scope 1, 2, and 3 accounting. So in theory, your non-land emissions would include all the obvious common ones that you've already probably calculated. So fertilizer production, and machinery usage, the dairy cooling system on the on site. But technically speaking, scope 3 covers purchased goods. It also covers purchased services. It covers business travel, commuting, lots of stuff that, to be honest, is going to be quite irrelevant to a farm. But there may be some categories, so capital infrastructure, that technically, if you want to align, you need to have that much more holistic view of the total scope 3 of the farm. Now, as I said, that's not going to really massively move the needle in terms of the total footprint, because the big ones are fertilizer production, energy use on farm. So other than the non-land emissions. And as I mentioned before, the main sources of data are going to be the tools, the secondary databases, just making sure that they cover a good, an adequate amount of the non-land emissions. So the land emissions are the ones which are the enteric methane, peat soils, nitrous oxides from fertilizers, similar likely data sources for primary and secondary. And the key risks or watch outs here are, you start using a tool to do your land management emissions, and they have a major gap in the tool. Like, it doesn't include fertilizer use emissions from nitrous oxides. I mean, that's unlikely, if I'm honest. I think from my point of view, I think this section is going to be reasonably well covered by all the tools and data sets, because this is like the core non-CO2 agricultural gases that people have been modeling for a long time. So enteric methane from livestock, etc. It is worth noting that the guidance doesn't, if you have any experience of calculating nitrous oxides or methane from cattle, the way that you can do that are many and varied and can be relatively simple or very complicated. And in the part 1 of the guidance, the land sector guidance in the GHG protocol, they don't have a requirement that you have to follow a certain calculation methodology or model. There's guidance in part 2, which kind of provides suggestions on best practices, but really all they want is that you shall account for and report land management non-CO2 emissions, and that's the extent of the requirement around the nature of the calculation approach. So that means that it's unlikely that a tool is going to be wrong in its approach to, or not conforming with the standard, if it takes a tier 1 approach versus a tier 3 approach for calculating a source of emissions or not. So the third category of emissions is land use change. And so the key message here is that the guidance is saying you need to include land use change for agricultural supply, for land sector supply chains. They adopt this 20-year assessment period, which is very common and it's been around for a while. It's in the IPCC, but it's also been used in other footprinting standards. So essentially what that means is that if a land use change event occurs, that the impact of that, the emissions from that, are allocated over the subsequent 20 years. So any crop that's grown 20 years post the land use change will get a share of those emissions. So it's not all kind of allocated to the crop that's sort of first grown after the land use change event. They say that you can use either direct land use change or statistical land use change. So direct land use change would be where you're gathering data from farms, from land areas on land use area, carbon stock, and land conversion dates, and actually doing the calculation to show that this land use change event occurred in this area, and then allocating it appropriately to the crops that follow. That's fine if you're getting back to farm, you are a farm, or your supply chains are short and transparent, traceable. But if you are sourcing a commodity where there's no potential to get down to the growing area, then they do allow the use of what's called statistical land use change, which is country average land use change associated with crops. And we'll come on to some of the challenges around this in a second. It's also worth noting that they, as well as emissions, they also ask at the moment for a land tracking metric to be reported by businesses. So in addition to land use change, total land area would be an example. I won't go into the reasons why they've inserted that into the draft, but it's to mitigate the risk of unintended consequences, basically. So so those are the key messages on land use change. Now, the risks and what the watch outs for this area are that you may use a source of data on land use change which is inconsistent with some of these requirements here. So these are a bit more specific in terms of the methodology. So you could get some, using the wrong methodology. You could assume that the certification sort of zeroes out your deforestation footprint, carbon emissions, which will come on to why that would be a wrong thing to be doing in some circumstances. And the other watch out, I suppose, is if you're heavily reliant on a forest risk commodity and you just completely exclude deforestation or land use change emissions from your inventory, then that would be not a good thing to do. There is obviously land use change associated with many types of crops in the world, but at least being cognizant of the high risk ones is the first step, and including those in your inventory. Now, I'm going to go into a little bit more detail on land use change because from our point of view, it's we think the most contentious and challenging area of accounting, and where we think there's still some debate and discussion to be had on what's credible. So one thing to bear in mind is that land use change, land use change emissions accounting takes quite a, it takes an inventory approach. It looks at an annual, in a year, what emissions occur. And whereas the world of no deforestation commitments is, being a carbon accountant, I would say it's more nuanced. It's more thinking at systems level. And so there's a bit of a tension between what you can technically do within a carbon reporting standard and what really is credible from a delivering change at systems level. So a couple of things this slide shows some of the similarities and differences between kind of carbon accounting land use change and credible deforestation and conversion free. So in terms of the types of land use included, they are quite aligned actually. So GHG accounting, technically you would be looking at all changes in carbon stock where there's a change in land use from all pools. So not just like the biomass, but soil carbon, a very complete view of emissions from the land use change. For credible deforestation and conversion free, again, all forms of deforestation and conversion are covered. So they're quite similar. The second one, the cutoff period, is probably the one where there is the most difference. And this comes back to this, the carbon accounting view that if you're having a land use change event, then you kind of allocate the emissions over 20 years subsequently. Whereas you could make a credible deforestation and conversion free claim, but have a cutoff period which is much less than 20 years ago. So say, for example, we're in 2023 now, and you used a scheme that had a cutoff date of 2020, then you could say that there was nothing in the 3 years, but that wouldn't satisfy the carbon accounting rule. So that is really where the key difference is, and whether it's worth noting. In terms of the type of certifications to use, within the GHG protocol land sector, they're proposing that only kind of physical, identity preserved or segregated certification can be used as a means of showing zero land use change emissions. And I would say that from a sort of credible deforestation conversion free, that's in a very similar place. There are credits and mass balance options, but from our point of view, those are more legacy, and we need to be moving to other forms. So there's quite a good reasonable alignment there. Now, this is I suppose the thing where we see the biggest challenge is you are allowed to use statistical land use change, so average land use change for a crop. Say, a good example would be soy from Brazil. So you could use a data set that shows, on average, a ton or a hectare of soy is associated with X amount of emissions from land use change in a year. However, that average hides a lot of variability, and there is quite, a non-insignificant risk that you either understate or overstate the land use change emissions footprint. Now, this wouldn't be such an issue, but land use change is a big part of a food industry footprint if you do it. So it has implications as to how much do you think your base year is against which you'll be measuring reductions. So for now, I mean, in the past we have been using country level averages for land use change because that's really the main data that's been consistently available at scale, and it was the method that's been used in various standards starting back from as 2050, a product footprint standard many years ago, 2007-9 time. I think the product environmental footprint approach from the EU maybe draws on the similar sort of methodologies. So it's been embedded, that sort of approach, for a long time. Now we think that the future really is around getting sub-national sourcing data and combining that with sub-national deforestation averages. So that way that you can get a much more representative view of your kind of land use change footprint, and that hopefully some of that data will be unlocked via the new due diligence requirements. But at the moment, there's a massive gap in that information. So even if we could get really good average regional land use change data, the main gap is the sourcing and location data for the crops. So that's one of the key challenge areas that we see it. Then finally, carbon removals. It's the fourth category that's covered by the standard agriculture. It's optional, and the key, I suppose, innovation here is that they're looking. They've put in the draft some requirements around monitoring and ongoing monitoring of those removals, with the intention that if you're making a claim about a carbon removal, that you can evidence that it happened and it's persisting. And if you lose track and can't monitor it anymore, then you have to assume it's reversed. So this is quite a conservative approach, and that's one of a new principle actually that they've included in the guidance, is a principle of conservativeness. So the key risk here is that you use a secondary source of emissions factor for a tree crop, say, and it's got a hefty negative in it, doesn't use any of the accounting requirements that are set out in the sector guidance, and you use that and you say, oh, look, this is massive negative, whereas that's it's maybe an industry average from 10 years ago. You need to be really getting primary data from from soil sampling, forestry areas, tree ages and species. We don't think it's possible to use kind of secondary emissions factors to claim a removal, because you just can't demonstrate that it's real. There's a need for more primary data, basically. And in fact, there is they call the monitoring framework, I think, in the guidance, and they have various categories of requirement for those who want to account for report removals. So ongoing storage monitoring, traceability, primary data, some uncertainty calculations, and also accounting for reversals if you lose the ability to monitor the removal. And this is a significant departure from how it's been done previously in various standards. I'll skip over that. It's just an example. And then finally, there is a section on this whole question around how does the interface between carbon credit markets and voluntary scope 3 or scope 1 to reporting, what are the rules that govern if you have a farmer that develops, sells carbon credits to a third party? How do you account for that in your inventory? there's some useful sections on that in there. And I think, again, a bit like the land use change, I think when we come to actually try and deliver this in practice, there's going to be complexities and challenges here, but it does address it within the guidance. So I think, unless I've forgotten, oh yes, so it's just the key points then. If you're doing, land sector accounting, doing that benchmark for ensuring the factors you're using, the tools you're using, cover the key sources of those land management emissions and non-land management emissions. Check the relevance of land use change to the crops, livestock products that you source. Do you need to be including land use change? If so, what's the most appropriate way to calculate that? Is it through primary data, or is it having to resort to secondary data? Most likely, unless if you were to conform with the standard, unless you can evidence your carbon removals in some way through periodic measurement, then it's going to be difficult to include those within your inventory. You should be reporting your emissions removals separately. In fact, there is a template example of how you report all the different flows separately. If you want to fully conform with it, you'll need to report all of these different flows separately. Calculating the sort of, bucketing up these into the agriculture and post-farm gate emissions is then needed for your target setting, or if you want to communicate this down the supply chain, then it'll be useful to be able to say, this is the flag emissions and this is the non-flag emissions. And yes, understand if farmers within your supply chain are selling carbon credits, and if so, exploring how do you account for that within your inventory alongside the standard. And finally, in terms of the flag target setting guidance, one of the key decision points is, what is the method? Do we use the sector, or do we use the intensity, the commodity pathway? So sorry, there's a bit of a rush there. I've realized I've only left 10 minutes for Q&A, which I promised I wouldn't do this time. I promised I'd leave double that. But
that's great. Thank you,
Megan.
Richard. Yeah, so actually picking up on that last point that you mentioned about the commodity specific versus sector pathways, we have a question here from Clara asking, do you think any other commodity specific pathways are going to be developed?
Yeah, that's a good question. I would say, I don't have any inside track on this. I would say probably yes. At the moment, they are based on a paper from quite a few years ago, an academic paper that looked at developing these pathways. I suspect there'll be a demand for more. The other thing to bear in mind is that in V2 of the flag guidance, it's expected that the commodity pathways may be evolved so that demand side businesses can use them or as well. So if you're a retailer, you could set a milk intensity target for that chunk of your inventory, which is milk farming, because in a way, with these sector specific approaches, the more specific to a subsector you can get, the better in terms of targets, because it just means they're more relevant. So I would say yes, probably, but I don't know which ones and when.
Great, thank you. We now have a question for Sean relating to the AFI recommendation of a cutoff date. Do you know whether this is the 1st of January 2020 or the 31st of December 2020?
Thanks, Megan. There's two specifications which AFI makes around cutoff dates. The first is that the cutoff date is aligned with the goal of ending deforestation by 2020, which means it should be no later than January the 1st, 2020. And the second is that cutoff date should be no later than the date at which the commitment is issued. So, for example, if you're setting your zero deforestation commitment in 2018, then your cutoff date should be 2018 or earlier. It's a good question, because when we're talking about cutoff dates, that kind of gives rise to the question of certification as a means of achieving your emissions reductions targets, which I know is a question we've had from a few people in the past. So I think just to kind of be clear here, because of that kind of 20-year period, before you can kind of start reporting emissions reductions. You would have to wait kind of 20 years from the cutoff date of any certification scheme you were using before you would be able to report any emissions reductions from that certification scheme. And a lot of the schemes that we see being used, especially for commodities like soy and palm oil, the cutoff dates will be around 2020, 2015 or 2008, which means at the earliest it would be kind of 2025 or 2028 when you'd be able to kind of start reporting on any emissions reductions from using certification.
Great, thank you. So Richard, we also have a question here about the use of tools for farm carbon. Yeah. And whether you'll be able to report removals from these, or whether you'll need additional monitoring of them.
Yeah, my interpretation is that tools, you could use the tools for estimating the the scale of the removals that might be achieved, but I think you need primary other evidence of carbon stocks through soil sampling. Not necessarily every year, but at least evidencing that there's a real change there and that it's persisting. So just kind of my personal view is that any tool that kind of has kind of removals in there purely modeled on sort of theoretical third-party literature on what is potentially achievable is a good indication, but you couldn't use it to feed into a report that's conforming with this guidance.
And leading on from that question, we have a question about the practicality of actually accounting for Scope 3 land management and land use change emissions. So is using tools the easiest way to do this, or what are the recommendations to make this easier?
Yes, as I mentioned at the top, I think the practical way will be using tools, and we'll be using third-party emissions factor data sources, or maybe even factors that have been provided by a supplier, who they've done their own analysis, that's got some primary data in it. So that will be the means that we do this. So very much like it's done at the moment, hopefully with more primary data, so more data coming from actual farms, because that's most representative, and that actually enables you to show real change rather than just based on average data, which is challenging to show. It doesn't really show real change as well as getting the primary data. So the way of delivering this will be broadly as we are now. It's just that there needs to, I suppose, be an evolution in the data sets and in the tools, so that if they it's up to them, if they deem it important to align with these guidelines, that at the very least you can report. They can report in such a way that it would enable you to do an inventory that's aligned with the GHG protocol.
And another question, also following on from this train of thought, is around the accounting of standard emissions that occur on farms, so yes. Fuel consumption, electricity consumption. So previously these would have fallen into a standard carbon footprint. So should they now be transferred over to flag accounting, or remain where they are now?
Yeah, so within the GHG Protocol land sector guidance, there is that non-land sources of emissions. So you do report on those as you were before. They are classified as non-land within the GHG Protocol. Whenever you come to then set a flag target, so under the SBTI, there's a slide earlier on that said that technically speaking, a lot of those non-land emissions aren't within the flag basket of emissions. So however, they say that you can actually, for practical reasons, they are allowing people to include, say, fertilizer production or farm machinery usage within their flag target. So it's a bit of that's probably one area where the SBTI flag boundary and the GHG protocol boundary isn't perfectly in sync, or at least the advice isn't perfectly in sync. I hope that answers that question.
Yeah, great. And just coming back to you, Sean, we have a question about clarification on the cutoff dates. So someone is asking whether, because they're setting in the zero deforestation cutoff, say in 2024, can they then use a cutoff date for 2024?
I'm afraid not. No, it would have to be 1st of January 2020 at the latest.
And there's also a question relating to the different definitions of forest based on the AFI versus FAO definitions of forest, and whether one is a more ambitious definition to use in your zero deforestation commitment.
Is that for me? Great. So the AFI definition of forest is based off of the FAO definition of forest. I think there's a couple of stipulations around kind of 10% canopy cover and trees being around about 5 meters high. So in terms of the definition of forest, those are very much aligned. AFI goes a little bit further in terms of, in order for a zero deforestation kind of commitment to be credible, you would want to include kind of both zero deforestation and zero conversion within that.
Great, thank you. And just as we start moving towards the end of the webinar, I'm going to launch a final poll to gather everyone's insights. But whilst everyone's answering that, I have another question for Richard about, is there a best practice for determining how many farms you need to collect data from to make a credible estimate? For example, if you have 100 farms in your supply chain, do you need data from all of them, or can you take a sample of those to gather detail?
Right, yeah, I kind of put my hand up to answer that. I'm not going to give you the number now. But what I'm from memory, I think in part 2 of the land sector guidance, there is a section on calculation methodologies and that cover the issue of sampling. So that is, there's no set requirement for it within the, there's not in part 1, which is the requirements piece, there's no requirement for you to do such a methodology, but there are best practices within part 2, I believe. If not, there have been some carbon footprinting guidance developed over the years that have used the sorts of sampling that you might find within, if you're doing research. So which I have to admit is my statistical knowledge is not that hot. So but there is, I believe, something in part 2, so I'd recommend just looking there in the first instance, which is, you can download it off their website, by the way, land sector and removals guidance, the GHG protocol.
And Richard, just a clarification, that flag removals can only be used against flag emissions.
Yeah, that's a good one, and I was scratching my head trying to remember this, and I believe that is the case for a science-based target. So a near-term science-based target, which is where you're setting, something like 2030 or a bit after now. The flag emissions removals can only be counted against that against flag. So you couldn't do a load of removals of soil and account it against, trucking product from a processing plant somewhere else. So that you can't do that, I believe. But again, don't take my word for it. That will be in the guidance, but that's my understanding. And then the other point is, I think, although this hasn't been, I believe, confirmed yet, if you're setting a net zero target, and when we get to the point where people are making credible net zero claims, obviously there will be, well, the expectation is there will be removals which will be needed to balance any residual emissions. My expectation is that there's going to be more of a open market, as it were, for where those removals occur, because obviously if you are, say, Microsoft, you're pretty limited in your supply chain as to where you can get soil carbon happening for removals, etc. So I think net zero, there will be more open, more traded, more a bit more, but for short term, I believe flag is quite restricted in terms of where those removals can be counted.
Yeah, that fits in with everything I've read about the topic. So as we're now coming up to the hour, I think this would be a good place to wrap up. So I'd like to say thanks to Richard and Sean for presenting today. And thank you for everyone attending the session. And we hope this has been really useful. We will send around an email with a recording and the slides. And feel free to send us an email if you have any further questions or inquiries. Have a nice day.
Thank you.
Thank you.